Now is David Lennox, analyst at Fat Profits. David, hi, thank you so much for joining us. And the weekend has been quite busy, by the way, with China's annual meeting of the National Party Congress. They have come out with a lower demand growth expectations at 5%. It was 3% last year, but the street was expecting 5.5 to 6% of a target from China, but they haven't delivered that. I mean, we clearly are waiting to see what numbers do we see going forward. But what's your sense? And the immediate reaction clearly has been some decline or profit taking in metals.
Oh, look, yes, there's no doubt about it. The markets have got itself somewhat hyped up to perhaps a 6% growth rate coming out of China. And as you said, Manisha, we've only seen that 5% growth rate predicted now. But look, overall, we still think that that's a very good number when you have a look at the size of China now compared to the size of China some 15 years ago. It wouldn't have made much of a difference then, but it certainly does now. So yes, it would have been nice to see that stronger growth, but it probably is better to have more sustainable and manageable growth at 5% than perhaps seeing growth get out of control, as we've seen perhaps in the early 2000s when China was growing very rapidly. So look, overall, yes, the markets will cut back a little bit because that expectation was higher, but it wasn't met. But overall, we think it is probably a much better number to work with going forward, and that's going to give some predictability, if you can say that, around resources, about demand growth going forward, and that's what's going to really be of interest to our big mining companies.
Also, David, when you look at various metals, I mean, last week was a good one. We saw 2 to 3.5% of gains on copper, aluminum, zinc, tin even. The markets were dealing with the dollar index, which was low, the Chinese PMI numbers, which came in much better than expectation. Is it really going to be a week-on-week, or do you see a directional move coming in for metal prices? How do you see March panning out?
Look, certainly if you have a look at March, we think there is going to be a lot of, as we've seen with the Chinese predictions for growth, there's going to be a lot of reaction to instant news, and that's going to be somewhat of a problem when looking at directions. However, you've got to look at the overall markets and would suggest that we haven't seen oil at this point capitulate in any way. So that would tend to imply to us that there is certainly a very good underlying demand there that's keeping the oil prices from slipping further south. And if that's the case, and we do start to see some let's say more consistent numbers coming out of China and out of the US regarding growth there, then one would suggest that we should see the oil price move to the upside. But I wouldn't be backing that completely, because as soon as we see any news that is to the contrary, we've seen oil prices give up quite a lot of ground. So expect volatility is what I'm saying. That's probably going to be the key driver, but perhaps just a touch of the upward in that volatility.
Going forward, David, I mean, this week or this month brings us a lot of data. You have monetary policy meetings from Australia and Canada. You have a non-farm payroll data. China inflation numbers also come in today. Actually, the trade numbers as well. That is expected in this week also. And then you have the US Fed meeting also happening in the month of March. What is it that you would want to watch out for if you were to take a directional trade? Would you buy metals at these lower levels? How would you want to shape up your trade?
Look, I think at this stage we'd be probably holding a fairly neutral position. We wouldn't be wanting to go into buying metals, but we would be very quickly moving one way or the other. Look, we really do believe that the key takeaway is not going to be the action of the Fed to moving rates. It's going to be what's in their minutes when they come out. That's really going to be what's going to fire up markets one way or the other. And we're all well aware markets have been looking for some sort of dovish stance or some dovish call coming out of the Fed. If that's the case, then we'll see strong markets because the US dollar is going to weaken, and that would push us into being buyers. If the other comes out and we see a more hawkish stance, then that's unfortunately going to take the other way. So really you're going to have to be patient and just watch for those key data calls and move when you see them, and move very quickly. It's going to be a volatile market, and unfortunately finding that direction, perhaps again uppish, but finding that direction could be somewhat difficult for another few weeks.
All right, we get that. David, also, how are you looking at the crude oil prices? You talked about that, and as you also said that we haven't seen higher highs come in for crude. 86 is where it seems to be getting resistance at. That and also the dollar index, because that also will tell us on where many of these dollar-denominated commodities would be headed.
Oh, look, yes, there's no doubt about it. We've seen that US dollar index. It had rolled over in the earlier part of this year. It is now somewhat stronger, and that's been on the sheer back of the Federal Reserve saying, no, we're going to continue lifting rates. So markets have built in a widening interest rate differential in the currency, and that's pushed it up. As I've said already, if you do see something different coming out of the Fed at its next FOMC meeting, that will certainly send the cat amongst the pigeons, and we will see that US dollar weaken. The metrics are there for the US dollar to weaken, but it just hasn't given up ground yet. So we're thinking that it probably will towards the latter part of this year, but we do need to get the Fed tightening cycle somewhat now behind us so that we can see an end in light for interest rate rises, and then that allows other currencies to narrow the interest rate differential and the US dollar fall. So that's the direction we're looking for, but it hasn't happened to date.
Well, yes, it is a difficult year, isn't it, David? Thank you so much, as always, for joining us and throwing light on what really to watch out for when it comes to commodities, the US Fed and the dollar index as well.